Hello everyone, welcome back to my YouTube channel. And today we are going to talk about a very important topic, that is journal. Journal in accountancy. It is like the base for all the books of accounts that is being prepared by the accountant in any organization. So without any further ado, let's get started. So in this video, you'll be learning about the meaning of journal with relevance to accountancy and what are all the key takeaways from the journal. What does a journal actually look like? That is a sample image. And then what are all the types of journal and its implication. Finally, I'll teach you how to actually prepare a journal, right? So what is the meaning of journal? Journal is a record or log maintained by the accountants. What does it mean? For every transactions that is happening, it has to be recorded in the journal. That is in a chronological order. What is a chronological order? It is recorded in a date wise. For example, 1st of January, all the transactions will be written, and 2nd of January, all the transaction, 3rd of January, it keeps going on like that. It is recorded in the date wise. Okay, so it is maintained, it's a record that is maintained by the accountants for the purpose. Why are we doing this? For the purpose of recording everyday transaction. So the maintenance of transactions in a chronological order is called as a journal, right? Now moving on to the next slide. What are all the key takeaways of a journal? It is a original entry. Why it is the original entry? Because the transactions are very huge in any organization. Per day there could be 1,500 transactions in a big organization, right? So it's all very vast. So we are actually putting it down in one place. That's why it's called as original entry. This is the first stage where the transactions are actually recorded for the books of accounts. Okay, that's why it's called as a original entry, and it's a recorded in a chronological order. Why is it recorded in the chronological order? To actually easily, when you look back to the previous month, it should be easy for you to place down the transactions, right? That's why it's mentioned in the chronological order. Third one is recording of transaction. First, the transactions are put into a journal. Only then they are taken to the ledger and trial balance and so on. So the first time the transactions are recorded in the journal, that is why it is given recording the transaction is a key takeaway of the journal. So what are the three key takeaways of the journal? First one is the original entry. Second one, it is recorded in the chronological order. Third one, it is recording transactions, everyday transactions that is actually happening in the organization. So this is a sample image of a journal. If you see, there are actually 1, 2, 3, 4, and 5. Okay, 5 columns are given. Why? Because the first one contains the serial number. The second one is the date. As I have mentioned earlier, it has to be recorded in a chronological order. So the date column is very important. Then it is called as description or particulars, because this is where you actually record the transaction and whether it is a debit note or a credit note, whether it should come in the debit side or in the credit side. If you can see, every transaction has both debit as well as credit. This is because of double entry system of bookkeeping. It's because of double entry system of bookkeeping, about which I'll make a video shortly. So stay tuned with the channel. So every journal entry should have both credit aspect and debit aspect. That is said in the double entry system of accounting. Therefore, minimum of 2 accounts has to be mentioned in a journal entry. For example, if you see here, one account is allowance for doubtful debts. Okay, that is one account. And the second one is accounts receivable. So there are two different accounts that is involved in a transaction, and it is mentioned in the chronological order. Okay, so I hope the sample image is clear. And one more thing which is very important here to notice is the narration to write off n Purkel account. It's given, right? So what is actually the transaction about? Say for example, here you can see to record the collection of accounts, cash to accounts receivable. If you just plainly write cash to accounts receivable, you may not understand. After going back over the month, when you come back and look into the transaction, you will not understand why we have given debit to the cash and why we have credited J sterling. Okay, so that's why they are giving a something called as narration. Narration is something about a description of that particular journal entry. Why am I crediting this? Why am I debiting this? I'm going to give what has happened and why am I going to give this journal entry. Okay, that is why we are giving narration. So I hope you understand. The first one is the serial number, second one is the date, third one is the particulars or description, debit or credit. Here's where we mention the amount of the transaction, and finally this is the narration. Okay, I hope it is clear so far. You are mentioning the journal entries as per double entry system of accounting, and this is the sample image of the journal entry. Don't worry if you're not able to understand. Anyways, I'll work out examples in the next upcoming videos, so it'll be easy for you to understand. And what are all the types of journal? This is again a very important topic. What are all the types of journal is? Sales, purchases, cash receipts, cash payments, purchase written, sales written, and journal. So let's go through it one by one. Sales journal. This mainly talks about the credit sales that is happening in the organization. It talks about the credit sales that is happening in the organization. And again, when the purchases are just given like this, it mentions the credit purchases that is happening in the organization. And when it is specifically given as cash receipts, it includes all the income and all the sales that is happening in the cash basis, that is without credit, whatever that you are receiving on that day, that is cash is paid on that day, only those transactions will come under cash receipts journal. And the next one is cash payment. As the name suggests, whatever the expenses and purchases, cash purchases shall be mentioned here, right? That is the cash payment. And next one is purchase written. What is the meaning of purchase written is you have actually purchased from your suppliers. Okay, you have purchased from supplier A for goods worth of 5 lakhs. Okay, and in that you have found out that there is a defect in 5,000 products, right? For 5 lakhs you have brought it, and you have noticed that for the goods worth of 5,000 there is a defect. So what you will do, you will actually return it back to the supplier. You will not use that 5,000 worth of goods, right? Because it is defective, it's not up to the mark. So what you will do, you will return it back to the supplier. That's why it is called as purchases return. You're returning the goods that you have purchased because there is a fault in it. Okay, that's called as purchase return journal. And sales return journal is something when the customer has bought it from you and they feel that there is a defect in the product. What they'll do, they'll obviously return it back to you, right? So that is called as sales return. When you are returning the suppliers, when you are returning to the suppliers, it is called as purchase return. When the customer is actually returning back to you, it means sales return. And journal entry, all the other transactions which does not involve the above mentioned items shall come in the general journal. Okay, and as far as the examples are concerned, since the video is very long, I'm planning to move the examples into the next video. So stay tuned for the next video wherein I'll detailedly explain how we are going to move about with the journal entries. I'll individually work out problems for all the 7 types of journal, right? Thank you so much for watching. Subscribe for more videos.